I can see a few more people are coming on here. We're just going to give it a few minutes for people to get logged in, and then we'll get started. So just if you can be patient with us here for a little bit, we'll give a few more minutes for people to get coming on. Thanks. All right, I'm sure we'll have people coming on here in the next few minutes, but we'll get started and start telling you a little bit about ourselves, do a little introduction here, uh, and hopefully we'll get some more people coming on here as we're going along. I'm Jeff Porter. I'm sales manager with Utah Community Credit Union, and I've been with the credit union now for 7 years, but long time in the industry. I should have probably not put 25 years. That kind of dates me, but whatever. Um, anyway, we've UCCU has been a great place to work. A little bit of history on me. I worked for a couple of big banking institutions, and then went out on my own into the mortgage broker industry, and I was in that industry for a long time, about 10 years, and then found my way to UCCU from some acquaintances from over the years, and I've been here for a long time now. So really enjoying the credit union. The main reason why I've liked it here is because of all the different lending that we can do. We're doing all the normal lending you hear about, the FHA, conventional, but we also do Utah housing, rural housing, and we'll talk about some of these coming up. But we do also portfolio loans with the credit union. So we do construction loans and lot loans, and we've got our own unique portfolio products that we offer. And what's great about us too is that we're doing all of our own in-house underwriting. We've got our own in-house processors. They're all right there here in Utah County, so they know the area and what's going on, which has been great. So anyway, I've been here over about 25 years in Utah County and raised a family. I've got 5 kids. Went to Weber State University. Originally was up from Ogden and moved down here. Been down here longer than I ever was back up in the Ogden area. But I love Utah. Love the skiing and big time golfer. So anyway, it's been a great fit for me here, not only at UCCU but down in Utah County. And normally, we're going to go to another slide. Normally, we have Brett Wild on with us, but Mikkel is filling in, and I love that because Mikkel has been my personal realtor over the years,
that means
and
a lot.
he has done a lot for me. So I'm going to let you tell you a little bit about yourself. And
Awesome. Well, James, you could skip to the next one with Brett on there. I'm really grateful and excited to represent the Wild Real Estate team here. Brett Wild, who you see on the screen, he is our team leader. So I am the director of sales for the Wild Real Estate team. And so we have a team of about 15 agents and assistants and administrators that work with us to provide just a completely all-inclusive experience for people in the home buying and selling process, as well as investing and building. And we'll get into that later. But I've been doing real estate now for 6 years, and I have done it ever since I graduated high school. So it's been a really long time doing it, and I've been really blessed and fortunate with the experiences I've been given on the Wild Real Estate team. A little bit background about the team. Brett's particularly has been involved in probably over 1,000 residential transactions now so far, and we have extensive experience with construction projects, with the building side, remodel side, basically every part of what it means to build a home, but also to buy a home and invest into a home. We work with just a huge variety of clientele from the Wasatch Front. We've even had some all the way to Idaho and some in St. George and Arizona. And so we've just seen kind of the whole spectrum of clientele, and I'm just really excited to be here and help educate those that are looking to get into real estate. It's a really exciting time.
Well, I'll tell you what, one of the things that I've loved about your group, the Wild Real Estate Team, is that you offer a little bit more than what some of the other places offer. I mean, you've got moving trucks that
Totally.
people can use. That's just a cool thing.
Yeah,
I mean, I don't know. It's a unique experience. And then, the ability to give that kind of HDTV service and helping
totally.
people with looking at the remodeling side of it is a big deal. So,
Yeah, we love just trying to give as much service and as much value to our clients as possible, whether that is through moving services, through remodel experience, and showing people how to really get the best return on their investment in real estate. And same goes to UCCU. You guys have been awesome. I've done several loans through them, and I know Brett's particularly has, I think, 6 loans through them right now, and we've only have great things to say about Jeff and his team.
well, fantastic. Thanks so much.
Yeah, you're welcome.
Now that we pat each other on the back,
Yes.
we'll go forward here and talk to you guys. And we're going to start off. I'm going to tell you a little bit about UCCU. I already hit here a lot of these points that we do a lot of different types of lending. But a big deal about UCCU is we actually sell directly to Fannie Mae and Freddie Mac, who are the big servicers out there
Right.
for conventional lending. And because of that, we can give excellent interest rates, really good pricing. And something that a lot of people don't know is because we're a credit union, we actually get credit union pricing and rates for mortgage insurance. The mortgage insurance is a insurance that unfortunately doesn't do anything for you. It's just for the lender.
Right.
But it's anybody that is above 80% loan to value, is not putting at least 20% down, then you have to pay what's called mortgage insurance. It's just rolled into your payment. A lot of people don't even realize that, but it's just part of your payment. Anyway, but we get a really good deal on that. And so in most cases, we're going to give you a lower payment than what you would get somewhere else. So that's a nice deal. We also have branches all the way up and down Utah County. We're all the way down to Nephi, all the way up to Lehigh, and we've just got 2 new locations in Salt Lake, in Draper and Harriman.
That's awesome.
So, and we're actually building one in Vineyard, just close by here. So, a lot of different locations where you can actually walk in. We've got a complete online system. It's our blend application system where you can go in, you put all your information in, and it's a secure place to take an application and upload documents. So we're pretty proud of that. And we're really super close to a full e-closing, which will be cool. You'll actually be able to do all your final closing from the comforts of your home or wherever you are, your business or whatever location. And so that's a really super cool deal. And in fact, it's just a matter of probably turning it on by the end of the year here. So that's going to be pretty cool. UCCU, because we've been, we started off as the BYU Credit Union like 65 years ago or something, and we've grown and grown and grown here. 1 in 3 people have done some type of business with UCCU if you live down here in Utah County. So 33% of everybody in Utah County has done business with us, which is fantastic. We're really proud of that. And because of that, we have a lot of really good connections in the real estate world. Like the Wild Team.
That's right.
And in fact, we've got some pretty cool systems, including, my gosh, I'll remember it later. But I'm just gonna, since I was thinking of the new system that we have, the Utah Home Buzz.
Oh,
there we
yes,
go.
Utah Home
Utah
Buzz.
Home Buzz.
Yes.
So Utah Home Buzz is a great site you can go to. You can Google that, and that's a good place to be able to look for homes as well. So really, really great technology where we were investing in at the credit union and working, with our partners in the real estate world.
Awesome. Sorry, Jeff, just to interrupt here, just so you guys know as well, we're going to be taking questions throughout. Feel free in the chat box to add any questions you guys may have.
Yes.
We'd love to answer those throughout the whole presentation. Sorry.
No, absolutely. No, yeah, that was a good point. Housekeeping item, right? So I'm just wondering what's back behind there? Technical things.
There you go.
Oh, there we go. Okay. Yep, there we go. Good.
Perfect.
So that way, if we get in either one. Okay,
Awesome.
so let's go to the next slide there.
One also really great thing about UCCU that I'll hit on is there's been multiple times when I bought my first home 2 years ago, it actually got serviced out through like 3 different providers. And what's really awesome about UCCU is they'll actually service the majority of their loans in-house. And so it was such a headache for me having to track down who my new servicer was, who I had to go pay my mortgage to every few months because it kept getting sold off. And with UCCU, it's just so great and so much more of a stress relief knowing that they're just going to hold the loan. I can go onto uccu.com and see all my accounts just right there in front of me.
Thanks. I missed that one.
Yeah, no
That's a
worries.
big one. That's really been really important to me too, in fact. So what that means is when you like close your loan, and you go to your online banking, if any of you have your online banking, you can see, if you have an auto loan, your checking, your savings, credit card, whatever,
Totally.
your mortgage will show up on there. And so you can go into your mortgage, you can set up your payments on there, you can see, how much interest you paid, anything, in regard to your mortgage. So that's really cool. And you don't have to, wait for your statement once a month to know what's going on. You can see it
Exactly.
immediately. And I've really loved that. And you can also even make extra principal payments and all kinds of stuff. And anyway, paper, I'm just not a big paper guy. So for me, it's so much easier to go. I think of something, I can immediately look it up. And I think that's important for a lot of people to look something up and go and get the answer right now. And then you're not stressed or thinking about or worrying about it. And it's nice just to have that ability with our online app or online banking. So getting into mortgages, and this is why you're here. We're going to go through this system of how this whole first time home buyer program works. And the first and foremost thing that you need to do is you need to get pre-qualified or pre-approved is really more important.
Totally.
And there is a distinction between pre-qualified and pre-approved. Pre-qualified is you put in your information on the application, we pull your credit, and you've told us what your income is, you've told us I've got about this much in my bank account or whatever, and we can look at that and we can from there generate you a pre-qualification letter. But nowadays, with how competitive it is to get under contract to buy a home, it's more important to get pre-approved. And pre-approved, we need to look at your pay stubs, your W-2s, make sure that we can see exactly what your income is, and get your driver's license, social security card, your assets, and really look at everything and make sure that everything works. And from there, it's a much higher level of an approval, which really resonates with those sellers. They want to see that from the people that are making the offers. And in fact, you guys have how many step program, or like the different things that you guys, Britt always tells.
Yeah, so one great point that Jeff made was the difference between getting a pre-approval and pre-qualification. And when we're working with sellers, we're seeking out buyers that have that pre-approval, and we vet them with their lender. And so if you have a pre-qualification, that just means, okay, the lender reviewed what you typed in, not what you truly maybe actually have on your bank statements or in your W-2s or pay stubs, right? So we use that a ton in our negotiations with sellers, but that just shows you exactly that with buyers, it is so vital that you have that pre-approval to be able to set yourself apart, knowing that all of your documentation has been verified from a loan officer to prove that what you said on the application is correct. And so this is one of our major steps in this market right now. Everybody loves to talk about it. It's an extremely hot market. People love talking, okay, it's just so crazy to win a house right now. How am I going to have an opportunity? How am I going to have that chance? And I'm not going to get into this a ton right now, but we actually have a certified 7-step strategy exactly. And our slogan is buy confident, sell confident. Whenever we discuss these kind of strategies with you, we want to be very clear on how we are going to give you the most education and confidence going into the housing market. There are so many strategies people use. Getting pre-approved, though, is one of the top ones that we talk about. And there's 6 others that are just so vital in this market to be able to stand out in comparison to everybody else.
Awesome. I wanted to bring that up. So let's go to the next slide here. So after you get all your information into us and we're looking at things, one of the first things we look at is your credit report. And a lot of people have major questions about credit reports. So I wanted to try and answer those now for you. First one, of course, the big thing, oh my gosh, if you're going to pull my credit, how's that going to affect my score? Well, number one, it's super important that we have to look at your credit history. It does affect it by 7 points, but those 7 points will disappear after 3 months. And the pre-approval is good for 4 months because your credit report is good for 4 months. So it's not a huge effect. And something else that people don't know is, well, if I shop around and I have multiple people pull my credit, is that going to affect me 7 points on all of them? And yes and no. That's the answer to that. I know that's the worst answer ever. But yes, it could affect you, but the Fair Credit Reporting Act, which is what lending is governed, one of the lending things are governed on, allows you to shop for a mortgage, an auto loan, and student loans. And they can see on your inquiries whether the credit reports can, whether you were shopping around for that specific thing. So if you had, 3 different people pull your credit looking at a mortgage, it should only affect you one time. The caveat is they say if you don't end up moving forward and buying the home, then they can go back and charge you or hit you with all 3 pulls. So at first, it's probably best just to get your pre-approval done with one lender. That's my whole point with this. And then, at the end, after you get under contract, at that point, it wouldn't be so bad to shop around because you already know you're going to buy a home at that point.
Totally. Let's answer this question. How does paying off debt affect your credit score? What would you say to that, Jeff?
It can be positive or negative. So if you have revolving credit, like a credit card, a store card like RC Willie, something like that, that is considered revolving credit. And typically you want to keep your revolving credit as close to zero as possible, but you still want to use it. Like using revolving credit is really important. So here's the main thing. Credit reports are going to look at how much you use in revolving credit on an individual, like one credit card, and then all your credit cards. So if you have 3 credit cards, for example, and they never want you to go over 50% of the limit. So if you have $1,000 limit on each of these, they wouldn't want you to go over $500 on your balance on each of these. And then they're going to look at each individual one and then the total. So probably the best thing to think of is I want to keep all of my credit cards 50% or less of what the limit is. And as long as all of them are under 50%. Anyway, oh yeah, sorry, we got 2 different things going on the side. Sorry about that. So that's just kind of the way that works. Now, the note, or it could affect you in a non-positive way for paying off is installment debt. So if you have an automobile loan, for example, the credit report doesn't like you to take out an auto loan and then pay it off too fast. Funny enough, if you pay it off quicker, they're saying you didn't pay it off in the agreed terms.
Okay.
So that's not to say you shouldn't pay off, your things earlier if you can, but weigh those options. And in some cases, it would be important to pay off something with a large payment in order to qualify for the loan. And so we look at all these things when we're doing your pre-approval and give you these recommendations based on your individual situation, because everybody's situation is going to be a little bit different. So that was a long answer to that question.
Let's see here. We'll take another question. Is it true that they take the lower credit score if 2 people are applying for the loan?
Yes, that is true. So what we actually pull is what's called a tri-merge. We're going to pull the Equifax, TransUnion, and Experian credit reports, and we take the middle of those 3 scores. And if there is 2 borrowers, we're going to take the lower of those 2 middle scores.
Okay.
So it's like the lower of the average.
Gotcha. Okay.
Is the way that works. Okay, this should be good. Okay. Yeah. What key strategies are effective for boosting my score? So we talked about revolving credit is really important. You don't want to get too many inquiries. So, don't, if you go in there like, hey, you can get 10% off for opening this card at Lowe's, for example, I probably wouldn't do that because they're going to pull your credit every time you do that. Other than that, it's really important just to make sure you make your payments on time. and that's the biggest thing. If you have a medical bill or something that you, you know, I would keep track of those because sometimes they show up if you don't pay them as a collection on your
Okay.
credit history, and so you don't want to have collections. You want to make sure that you're always in contact with, um, you know, doctors or whatnot that you might have a medical expense with. Um, Debt to income ratios, and what do they mean? Debt to income is the ratio. All that means is your debt payments divided by your income equals a number. And so what we are looking at is we look to have somebody under 45% of their total income compared to their debt. And we're actually looking at the gross income. So that's before they take out your taxes and your insurance and all those kinds of things. So it's a pretty uh, non-conservative,
Yeah.
robust
Yes.
way of looking at your income ratios. And the one thing that I think is important to know is when we're looking at getting you pre-approved, we're not trying to max out the as much as you can possibly get. We want to say, okay, I can qualify you up here, but this is what the payment's going to look like. How does that really feel to your budget? And most of the time, it's usually above where you feel comfortable. So then we dial it back down. We go, okay, where do you want your payments to be that feels good in your budget? Maybe that's 1,000, maybe that's 2,000, maybe that's 3,000. I don't know. But everybody's going to be different, right? But we look at that and we go, okay, based on where you feel comfortable, this is how much you could qualify for right now in the market and with what you're putting down. And so that's a big part of the pre-approval process.
There's one thing I want to touch on there. I know probably a lot of you guys are renting or in the not really paying a mortgage, and I think sometimes I even had this conceived notion, and before I was in real estate full time, is okay, so part of my debt, is that considered my rent? And it's not. So it's actually just, you can correct
No,
me if
you're
I'm
right.
wrong,
You're
right?
right.
So the debt is actually just your current credit card utilization, any student loans, car loans, any other debt, not your current living situation. So that's not going to be factored into that debt to income ratio.
Yeah, good point, because you're going to be leaving that when
Right.
you buy the home. So we don't want to count that against you because you won't be there anymore.
Exactly.
So we wouldn't want to do that.
What scores get the best rates, Jeff? That's a great question.
So they're tiered, and it kind of depends on the program that we're doing. So we're going to talk about different loan programs, but you can go all the way down to a 620 credit score and still get qualified. Actually, I think we have something at 600, um, eh, but just your prototypical. If I was to give you a standard answer, the best credit scores are anything above 740 and above. So, but there are programs to where we can do 100% financing, and anybody that is a 660 credit score or better gets the exact same rate. So it depends on the program and what we're doing.
Cool.
Do we want to read this one? We'll go.
Yeah, let's read this one from Cameron Bennett. Is a rental property included in debt to income ratio? Uh,
Yes.
yes, the answer is yes.
So I think this question, I'm not sure where you're going with this, but I'll just try to answer it. So yes, the payment on the rental income was counted against you, but yes, the income that you're making from that rent is included to offset that payment too. So we're able to offset part of it. We can't do the whole. Well, there's two different things. So if you have a 2-year rental history on your taxes, we're going to take the depreciation and everything involved on what you've made on the taxes, and we're going to come up with how that applies to that rental property. If you haven't had it for very long, then we're going to look at your lease agreement, and we're going to take 75% of the rents from your lease agreement to offset your payment. So that helps a lot of people get qualified to move into a home. And some people that already own a home can keep that home and buy another home and have the rents, 75% of the new rents on that offset the payment to help them qualify for another house. And that's actually a strategy, an advanced strategy that the Wild team works with their clients to help them get more real estate
Exactly.
and buy more homes.
So one question on that, Jeff. Do you have to have a certain amount of reserves as well for
Yes,
something like that?
typically it's only 2 months,
Okay,
but yeah.
perfect. Then one other question. We've been told that paying our rent on time helps our credit score. How would we determine if that made a difference in the last few years?
So you can get a free copy of your credit report every year. by going to annualcreditreport.com. Do you want to type that in somewhere?
Yeah, let me send
It's
that to the chat.
annualcreditreport.com. Oh, you're so fast.
There you go.
Anyway, and so you can do that. Now, annual credit report is not going to give you your score. You have to pay extra for the score, or you can just go to your institution, your banking institution, and typically they have a place that says, hey, click here to find out your score. So you can just click on that and find out for free.
Awesome. One little plug I want to make, guys. We are at the Wild Team, we are so involved with just the educational process of the background with the financial end, with the buying real estate end, that we're actually providing these two books. It's Buy Confidently.
I'm gonna hold this up.
Okay, awesome. Here's
then
another
you
one.
got it.
So Buy Confidently is a book that actually Brett Wild, who was mentioned earlier, wrote, and then I helped edit and tweak. And we actually wrote it to help give people the complete understanding of the home buying process, going into building your credit, how the loan application works, finding the best lender, how to find the best real estate agent, just every step of the process, including even the documentation of a real estate purchase contract and some seller disclosures and some other ideas to give you guys the best foot forward when starting this process. And we also have another book. It's called How Money Works. This is actually just a super basic financial literacy book. And we're finding more and more that clients just aren't really understanding compound interest or the rule of 72 or how to save for retirement, and the specific insurances you need. And so this book really dives into that we're actually going to give to everybody here for free. And we're going to have some of our team members actually reach out to you and schedule a time to give these to you. But these are just super beneficial books that will go over the credit, go over just all the basics of just building a really strong financial background.
Is this, Mikkel, is this a book that they buy, or is this just something that you guys?
Yeah, so it's something that we just want to offer for free for being on the webinar and working with Jeff and I. And just even if it doesn't work out and home buying isn't in your future anytime soon, we just want to be a resource for financial education and get you on the right path for when the time is ready, you are ready to go. So expect a call from us and you'll be able to have really good understanding of positioning yourself to win when it's time to purchase.
So I'm going to keep going on and answering some additional questions here. Is the 28-34% of net looked at for maximum loan and monthly mortgage payments? No. Answer that question. Most people want to be somewhere 28-34% of their ratio for their housing ratio, just the ratio of how much the payment on the house is going to be compared to their gross income. But that doesn't resonate with every loan, and it's not a requirement on specific loans. It is better to have a larger down payment or to have a moderate down payment and then disrupt the amortization schedule with a large deposit towards principal. It depends. It depends on how. Yes, if you put less money down and you're putting an additional amount of principal down, you can pay off the home much faster. There are amortization schedules that you can get online. We can look at that when I'm doing your pre-approval, and but there is a break-even point. So, like if you're putting money down on a property and you're like, okay, I want to know how much it's going to take to pay this house off in 15 years, and so we do the calculations and we figure that out. Well, there's going to be a break-even point between putting down a larger down payment and having the extra principal, and so it depends on your individual situation and how long you're going to be in the property, and there's a lot of factors there. So we'd have to talk to you about that individually.
And I think one thing to know is that both the Wild Real Estate Team and UCCU, we are really dedicated to the long-term vision and really want to dive into your long-term real estate goals and your financial goals. And so with that question, there's probably a lot of you that have similar questions about the financing end and the home buying end of how we can really propel your success and your wealth in real estate. And so we'll dive into that more as we connect after this with either a team member from the Wild Team or from UCCU to get into what is going to be the best strategy for you.
Let's go to the next slide.
Let's see if there's any other chats. Okay.
So I think we've kind of hit this. We're talking about how much can I qualify for. So just quickly, we're going to look at your total income, and then we're going to take your current monthly debts, your auto loans, credit cards, student loans, those type of things, and we're going to individually look at the best programs that fit your situation, whether that's a conventional loan, FHA, Maybe it's a rural housing loan. It just depends on where you're buying and whatnot. And we're going to figure out how the best interest rate with those programs are going to work. Most importantly, and I said this earlier, we don't want you to be house poor. We don't want you to have to sit home and grow your own garden because you can't afford to go out to eat. Nothing like
No.
that. We want to make sure that you feel comfortable with the payment that's going to be for your particular budget.
Yeah, let's see.
Oh,
There we go.
And so that's a big part of this pre-approval process.
Let's answer this question because this is actually something that we deal with, I think, more regularly than normal in this market is parents or family members helping out people with gifts for money or for down payments or closing costs. So how does it work when you are gifted money? Could that count or go towards the down payment?
Yeah, so gifted money is just, it can either go towards the closing costs or the down payment, either one, and it certainly can help you. So the most extreme situation is you couldn't qualify without it, right? So some people don't have the money to put down to buy a home, but with gift money they can. And gift money can be used basically on any purchase. It does need to come from a family member, mom, dad, aunt, uncle, cousin, whatever, but it has to come from a family member. And we do have to verify where those funds are coming from. And so that's important to understand that the person who's gifting you the money can't borrow the money. Well, actually, they can from a home equity line of credit from their home.
Gotcha.
But it can't come from unsecured funds. So they wouldn't be able to lend you the money from taking out money off a credit card or something like that. So they have to have the money in an account, savings, and that's typically, mom and dad typically are like, we want to help our son or daughter get into a house, and they usually help provide money. And so we just we provide a gift letter, everybody signs the gift letter, and then we get the documentation on those funds. But that's a great way to help with the down payment. Absolutely. Here's another question up here. We've been told that paying our rent on time helps our credit score.
Oh, we handled that one. Sorry,
Oh,
Jeff.
I'm sorry. Okay.
Sub question with that. What happens if it's through surrogacy?
I don't know what surrogacy we're referring to on that.
I am not sure either, to be completely honest.
Kimberly, expand on that for us. We'll keep going.
Keep going.
So what you can qualify for is not necessarily what you can afford. Let's go to the next slide. Let's talk about some loans. So there's different types of mortgages, and it's important to understand that there are fixed rate mortgages and adjustable rate mortgages. If you're out there shopping, what we find sometimes from what I've found is that I will have borrowers come back to me and say, hey, I just saw this advertisement that I can get 1.5%.
Yeah.
And I'm like, okay. And that's probably an adjustable rate mortgage for a year. And then after that, it's going to adjust up to 4 or 5%. So you have to be careful with those type of things. I much prefer the fixed rate mortgage. And what that means is that your rate is not going to change during the life of the loan. Adjustable rate mortgages are just like they sound. They're fixed for only a short period of time, and then they adjust to whatever the current pricing is at that time. And there was usually something that's tacked on top of it. So watch out for that. There's different types of loans underneath the fixed and adjustable rates. UCCU just deals with fixed rates. We don't even work.
Don't even touch those.
No. And so conventional loans is the big one. Conventional, these are great. These are all what Fannie Mae and Freddie Mac are the main servicers on those. And we actually sell directly to Fannie Mae or Freddie Mac, or we just keep the loans ourselves at UCCU, either one. And even if it's sold to Fannie Mae and Freddie Mac, we're still servicing and keeping the loan. So I should have made that distinction. We're still keeping it. We just have them as the pricing side. And these do require 3 to 5% down. So, if you have a $200,000 loan, for example, or purchase, then at 3%, that's $6,000 down.
And I'll say just the adjustable rate was really a hot topic usually in like the 2006 to 2008, or probably even prior. That's what kind of had a big influence on the recession of 2008. But in truth, I personally don't really see too many people these days going with adjustable rate. It's just truly people are really looking out for that fixed rate, especially with how low interest rates are right now.
So at the bottom of here, it says stricter guide or lending guidelines on these conventional loans. Actually, it's kind of reversed here over the last probably year from when we started putting these slides together. FHA is a little more strict now than the conventional lending, I would say. But neither here nor there. We're going to talk about FHA in a second. So let's go to the next screen and I'll talk about that. So FHA is a government loan where conventional is handled by this Fannie Mae and Freddie Mac institution. Because FHA, oh, can you flip the screen there, James? Or go to the next one. Because FHA is owned by them, they do 3.5% down. Now, if you remember back to the conventional loan, conventional loans were 3% down. So FHA requires an additional 0.5% down. Pretty darn close, but there is a slight difference there. I think the biggest difference between FHA and conventional, there's two main things. FHA loans do give you a better interest rate. So people tend to say, well, maybe I should go with that better interest rate. But you don't ever get anything for free.
Mhm.
And FHA has higher mortgage insurance, monthly premiums, and this is an important one, they add 1.75% to the loan. You don't have to pay that out of your pocket, but they just add it to the loan so that when you refinance or pay it off or whatever you do with that or sell the house or whatever, they collect that 1.75. So they're making this extra money on the loans, but giving you a better interest rate in return. Where conventional loans goes a little bit higher in the interest rate, but they don't have that 1.75 and they give you a better monthly mortgage insurance. So what does that mean to the payments? Well, the payments actually end up pretty close to the same. But it is a little more costly on the FHA side. So are they a bad loan? No, FHA loans are not bad loans. They are good loans. There is just a slight difference on the way that they do it between that and conventional.
I would say too with FHA loans, a big difference between that and conventional is FHA you can have a lower credit score. Is that right, Jeff?
Yes,
So you can
yes.
qualify even with maybe a lower credit score.
Right. So you can still qualify with a lower credit score on a conventional loan. However, then the mortgage insurance starts to get higher.
Okay.
So then it doesn't start to make sense to do the conventional at all. So if you do have lower credit scores, that's a lot of times we use FHA because they don't have adjustments.
Gotcha.
Or as many of them anyway.
Perfect.
So Utah Housing is the next one, and I know we're going to have something up here in a second, but Utah Housing is another one, and what Utah Housing does is uses the FHA loan, but then does a second mortgage simultaneously to give you up to 102.5% financing.
It's amazing.
That is awesome. So I do these all the time for folks. And what's really cool about it is, well, first of all, you'd say, well, why do I need 102.5%
Right.
financing? Well, obviously to 100%, you don't have a down payment, but you do have closing costs. You have title work, appraisal, lender fees, all these different things. So 2.5% covers that. Almost all of it in most cases. And so there you go. Now you can get 100% financing. Now, does that work for everybody? There are some limitations, but it works for most people. So it's really, really great. And this is the one where if you have a 660 credit score or higher, it doesn't matter how good your credit score is. You can either have a 661 or an 800 credit score, and you're going to get the exact same rate.
Oh, okay. Interesting.
So pretty cool.
Let's hit on these really quick. Remind me what the 1.575 or 1.75 was related to on the FHA
It's called an
loans.
upfront mortgage insurance is what it's called, and FHA charges it on every single one of their loans. And it's just something they add to the loan. It's not, they actually add it to the loan amount and don't make you pay it out of your pocket, but it's there.
Gotcha.
It's a cost.
And then what's considered a lower credit score for maybe an FHA borrower?
So FHA borrowers, typically, if it's just FHA, you're going to see a lot of the people using FHA if they're pretty much under 700.
Okay.
Somewhere between like 620 and 700 is kind of where you see a lot more people using FHA. On the conventional side, it's really tiered. So 720 to 740 is one tier. Um, 700 to 719 or 720, 680 to 700, 660 to 680, and then you really would never do a conventional loan under 660.
Gotcha. Are there any circumstances where mortgage insurance isn't required?
Yes, with 20% down.
Okay, there you go.
Well, you're still having mortgage insurance in doing this other little strategy, but what you can do is you can pay off the mortgage insurance up front so you don't have a monthly amount. And what they're doing is they're saying, okay, if you'll pay us a big premium right now, then we'll take away your monthly amount to your payment. But that just means you have to come in with more money out of pocket.
Gotcha.
So, but if you plan to be there for a really long time, then it would be worth it. In some cases, it just
Yeah.
depends on the situation. I wouldn't get too hung up on the mortgage insurance side of it though, because it's really not that expensive.
Right.
And it doesn't make that much of a difference to the payment. And one of the things we look at is we'll say, okay, so you can come in with all this money to get rid of the mortgage insurance, or you can pay this small amount.
Exactly.
How long would it take you, if we divide the two, how long would it take you to break even? And it's usually a really big number.
Right. Yeah.
So it makes a lot more sense to just have that smaller amount added to the payment.
Yeah, we work with people all the time. They're like, oh, yeah, I thought 20% down is the absolute minimum you have to put on a property. And I think that's just a really preconceived, maybe Dave Ramsey notion that that's what the expectation is. When in truth, there's just so many other options where you could really walk into a property with no money down, which is just amazing that Utah Housing has this program and that UCCU offers this. One other question I wanted to tackle too from it says, I've heard that using a first-time home buying program would make us less attractive to this home seller and thus less likely to get the house. Is there any truth to that? And if so, what are the reasons? There is some truth to that. And depending on who your agent is and what strategies you use on placing an offer, there may be a ton of sellers that are like, no way, I don't want to touch a first time homebuyer program because there are some circumstances in this market where you need to have some cash in order to be more, I guess, attractive to most sellers with some appraisal contingencies and things like that. However, I've worked with tons of first-time homebuyers using this first-time homebuyer program, and we've actually been able to beat out even conventional loans with the strategies we've used because of the aggressiveness and the confidence we give our buyers that if we do these steps, you will have the best shot of winning possible. So there are definitely some times, depending on your strategies, where using these programs may be a little less attractive, but completely depends on how you write your offer and how you strategize on that. And so we can talk more about that individually.
Yeah, definitely. And I've seen you guys get offers accepted on properties that I didn't think we had a chance
Yeah.
at. So I've been really, really happy with that. Okay, so get back to different loan types. VA loans, great loan. If you're a veteran and you've been in the military and you've
That's right.
got
Thank you for your
benefits.
service. If you're there.
Yes. If you happen to be a veteran, please talk to me about that because you can get 100% financing. There's no down payment on it. There's no monthly mortgage insurance. And that's a big deal. So can you qualify for a VA as a dependent? No, you have to be the veteran. I think that's what you're asking. So you can't be the dependent of the veteran. You have to actually be the veteran. USDA loans, excuse me, or rural housing is what we call it. Rural housing, this is a great loan. Again, 100% financing. It is really good. It has a tiny monthly mortgage insurance compared to regular loans. But there's always a but, right?
Right.
But it's only available in certain areas. You have to be in a rural housing area. So there's Salt Lake County, there isn't any. Here in Utah County, we still have two areas. It's west of the Jordan River, so parts of Saratoga Springs, Eagle Mountain, and it's south of the Spanish Fork River in southern part of the valley. So
Payson, Santa
Yeah.
Quinn,
Right. that area.
Goshen, just South Utah County.
South area. So if you go into those areas, we definitely want to look at the USDA loans. They are pretty picky on their stuff. You have to make a certain amount of money, and then they don't let you go. You can't have very much debt, so it's a tricky one, but it's a good loan. Let's go to the next one. Next slide.
Awesome.
So One other thing I want to hit right before we get into your side of this
Okay, perfect.
is there are grant programs available. And these grant programs, um, they're really based upon, they're income based because they're trying to help those who make less money. And so depending on your household size, it can go anywhere from like 46,000 up to about $90,000. I think it even goes higher than that, but depending on how many people are in your household. And so we've got some different grants down here in Utah County. One's for like 7,500. There's another one for like $20,000. These are huge amounts of money that are just out there and available. So as we're looking at your pre-approval application, we want to look into those, see if you can get approved for any of these grants, and use those to your advantage. And we look at those with every single one of our loans. So keep that in mind as well.
That's an awesome, awesome opportunity. I want to hit on one last thing, just another plug for Utah Housing. Um, so many people in my sphere and in my network. I mean, I'm in the younger 20s. I'm probably very familiar with a lot of you guys looking to get into your first home. And some of us are just cash strapped and we're like, how are we going to get in a home? I have a great job, I have a W-2 job, or I've had 2 years of work history as an independent contractor, but I just don't have any cash for down payment. And I'll tell you what, it's blessed so many people's lives being able to get their foot in the door and just have this opportunity to be able to purchase a home without any cash and just knowing that they have solid work history, a solid just credit score, everything like that just really is a huge blessing and benefit to so many families out there just looking to get into their homes. So just another great plug for Utah Housing.
And another strategy we've done with those programs, whether it's Utah Housing or someone that's only putting 3% down or whatever the situation might be, is we will stay in contact with you because we want to be your real estate and lending professional for the life of your loan. So as you're going along, we actually have a system called HomeBot. And so you're going to be getting sent out information about the value of your home. And as you see your value of your home increasing and getting better, we can actually do a refinance on your current loans to get them out of the mortgage insurance. Right. And it's like getting a raise.
It really is. It really is.
You can eliminate that and put yourself in a better position. So something to think about. You don't have to be in a loan for the life of the loan.
Right.
And a lot of times, there are lending strategies that help you save money as you're in the home and going forward.
Some of those strategies include biweekly payments, paying more towards your principal, but really just keeping an eye out on your rates every 6 months. Like once you were to purchase a home in 6 months, if the rates drop or if they don't, I mean, I don't see them dropping anytime soon, but the interest rates right now, I want to make this plug. I totally forgot to, but people right now just have such a big hype and want to talk about how the market's going to crash. And I hear it all the time, the market's going to crash. Like, why are people buying right now? And then we ask some questions and get a good understanding of why they feel that way. And they're like, well, it's just like 2008. Well, in 2008, well, in 2008, it was what, 6-7% for a home if you're lucky to get into a house, even. And today, there's just the inventory right now in Utah and Salt Lake County, there's only 45 days of inventory, meaning that if no other homes came on the market within 45 days of today, there would be everything would be sold, everything would be gone. And so if you look at that versus the complete opposite in 2008, there was about 6 months to a year almost of inventory. And so the lending requirements have gotten a little bit stricter. There's just some different regulations after that whole fiasco.
Oh, yeah. From my perspective, it was nuts. There was Ninas, which meant no income, no asset.
Yes.
There was Ninjas, no income, no job. I mean, it was crazy time. And, people, if you had a heartbeat, basically you could get a loan. It was really nuts. And you can imagine that there was a lot of bad apples out there who were taking advantage of these programs, and they just had no intent of ever paying on these homes. A lot of times what their strategy was, I want to buy this home, I'm going to sit on it for 6 months or make a few payments on it, and then I'm going to sell it to make a profit. And I'm just going to keep doing that.
Right.
And terrible idea when you're dealing with this when you know more. But in the meantime, you have the people on the back end, the mortgage-backed securities people that had all these bonds, and they're saying that these are AAA rated. Well, they weren't. They were junk bonds because people weren't making the payments on them.
Right.
And so it's a whole different scenario. Since, when that happened, everything was tightened up. You had the Dodd-Frank Act that doesn't allow for things and never will. And we will never repeat that situation again. What's happening now with the values going up is more about our economy, about our
100%.
incomes going up in this area and across the nation. And it's a completely different scenario.
It totally
We're
is.
not in a bubble. We had a little bit of a rise and now we've leveled off.
100%. We'll touch on that in a second. We've definitely seen a little bit more of a stabilization than 6 months ago. 6 months ago, it was just absolutely brutal for buyers. Great for sellers. It still is so great for sellers, but there's just more active inventory. There was a time where there's only 20 days of inventory on the market. So it's about doubled, which is a super huge
That's
benefit for buyers. And then two, when we're talking about interest rates right now, what would you say 30-year fixed at just a
We've jumped
good
up a little bit
borrower?
at 3%.
3%?
Mm-hmm.
So probably about, a month ago, they were still like 2.8-ish,
They're
2.75.
2.75 about a month ago. So
Um,
they've jumped up a little. Well, I wouldn't say jump. They've moved up just a little bit.
moved up.
3% is an amazing,
It truly
amazing rate.
is.
We're in an era where people are like, oh, but I really need to have that 0.25%. Are you kidding me? My first
Right.
loan was 7.125%. 7%.
Oh, it's so awful.
And I was so excited when I refinanced to 5.5.
Right. And when I bought my first home in January of 2020, it was at 4.5. And I was like, oh yeah, this is awesome. And it's just changed so much since then. And so really capitalizing on that rate, because for a $300,000 loan, if your rate spikes from 4 to 5%, we'll just use that for now. You're going to pay $66,000 over the life of your loan in interest more.
Yeah.
And you're going to pay probably on average, like, what would you say, $200 to $300 more a month, most likely just on interest. And so imagine what, going from 4 to 3% is going to do for your affordability and your payment.
Yeah, interest rate is the biggest factor on whether it makes sense to buy real estate. And we are in a situation where that is a huge green check mark.
Totally.
Yeah, it's a perfect time based on where the rates are to get into real estate right now and take advantage of that American dream.
Totally agree. Okay, so we'll move on. Finding a real estate professional. I know you guys have probably all seen the ads and the billboards about real estate agents and whether they're worth it or not. But I'll tell you, I have a really great story for this. I've had actually several buyers that I've known that I grew up with, I went to high school with, that I went to college with, that call me while they're in the middle of a contract. And this one in particular calls me and she's like, hey, we are under contract with the seller, that we're not represented, the seller's not represented, nobody's representing us. And the seller kind of wrote out the contract for us. We didn't even write it out ourselves. And in every single situation, if you're doing this right, you are writing the contract, not the seller, because that's a complete conflict of interest, right? So the seller actually wrote out her contract to purchase this home in American Fork that they found just from a yard sign. And the seller actually wrote in some legalese and some contractual items that they just thought, yeah, I'll figure this out. I went to college. I understand what these mean. I know what it means. And unfortunately, it actually waived a majority of their protections in this offer. And so they did an inspection and they found a ton of things wrong with the house. But in their contract, it said that the home was going to be sold as is. This home, when they walked through, knew it had several problems, but they just thought, oh yeah, this must be normal because this is what the seller is offering. And some of us may think, yeah, why would somebody be that kind of naive and not that smart when it comes to home buying? But there are people that just get so excited about the adventure and so excited about the step that they forget that this is the most important process and investment of your lives. And if anything goes wrong, it could really skew you up.
Think about it. I mean, you're going into a contract to buy $500,000 home.
Oh, yeah.
A lot of us won't even get that much into our 401k at the time.
That's right.
So this is a huge, huge thing. And I think it's really important. I know you're getting into this, but really important to have a professional make sure that you're taken care of and that there isn't something within a contract that is going to affect you negatively or put you in a really bad situation.
Totally, 100%. And not only did these buyers, they agreed to buying the home as is, there was over $20,000 in repairs after the fact when they closed that they had to figure out how to get on them themselves and fix on themselves for it to truly be a livable property. Because there are just some things that they completely overlooked. They didn't even um, just really consult with anybody about this process. And even family and friends were like, oh, yeah, it's no big deal. Just go work, do it yourselves. It'll be fine. Because they trusted the seller, and the seller really, really just destroyed this opportunity for them. And it really hurt them financially. And not only that, but they also, the sellers, because they just had no representation, the sellers actually sold their home for probably $20,000 above market value. And because of this, the buyers had no clue what the market value really was for this home. And so they actually had to come up with an additional $20,000 in cash in order to close. And just because, thankfully they had parents to help them with some gift money, but in truth, I mean, what a burden to go to your parents and be like, hey, parents, I really want this house. I need $20,000 more in order to close. And so there's just so many steps and layers to the home buying process that I think people just, it's actually a very simple process, but if you get any contractual issues um, skewed or mistyped even, it could really land you in a really tough spot. So why you need an agent, it really is to protect your investment and protect yourselves. We know this backwards and forwards. We closed over 200 homes last year alone, and we're on track to do the same this year. And so we know this in and out completely. Our responsibility is truly to protect you and protect your and protect your financial well-being. We want to look at or financial well-being maybe a little too aggressive, but protect your financial position when it comes to buying a home.
Right.
We really just want to help everybody get at the Wild team. We really want to look at your long-term goals. And so after this webinar, you'll actually be receiving several calls from our team members, setting up a time to have an evaluation of your long-term goals and see what we need to do today to get you on track to hit those.
Because this is an important first step.
Most important.
You never, without taking that first step forward and finding out what you need to do, and this is all free. This isn't going to cost anybody anything. It's just
Totally.
something that it's important to take that first step, understand where you stand, what it's going to look like, how this is going to affect my budget. Is this the right thing for me and my
Right.
family? And that's the important step that we're
Totally.
going to do. You're in a groove here, but we
Sorry.
do have a
Go
couple of
for it.
questions. Do we want to try and answer these now, or just
Yeah, let's answer these now, and then I can go into the how are we paid. I know that's going to be a hot one.
I'm just going to hit this real quick.
Yes,
Will
please.
there be $300,000 homes with 3 beds and 2 baths in Utah County again? Yes. I'm looking at them every day.
That's right.
Mikkel sends them to me. In fact, I saw one for 275 and one for 280 today.
Yeah, that's awesome. And the single family homes, they're maybe a little bit tougher to find with your own lot, your own land. They're definitely out there, don't get me wrong. But you are going to mainly find 3-bed, 2-bath condos and townhomes in Utah County under that price range. So it's definitely doable. And it's a great first step. It may not be your dream home because don't expect that on your first home, but it will definitely be one of the best steps in order to achieve that later down the
Well,
road.
and this is one of those great properties for having renters in later
Oh, totally.
and creating that real estate wealth down the road.
100%.
So anyway, and then quick clarifying question: is getting 100% financing through a second mortgage different from a first-time home buyers program? If they are different, does a second mortgage still risk making us less appealing to a home seller? No, that's not something that you're disclosing to a seller.
Right.
And so even though I told you about the first second combo program with that Utah housing, that's not something that's disclosed. So nobody knows that except for your lender and you what's
Right.
going on. So
Yep.
was there one above that, or is that?
Let's see. No, that's
No,
the
okay, same thing.
same kind of thing.
Okay, sorry, go ahead.
Great. Okay, so how are real estate agents paid? So when you are going to, well, let me just back up here to that story I was talking about earlier about this friend of mine who was just like, yeah, I just thought it'd be okay. I just didn't really recognize that this was such a big decision with his contracts, his paperwork, and then the the steps after that that are so vital. And I'm like, well, why didn't you just ask me to help you out? I mean, it wouldn't have cost you anything. And she's like, really? And I'm like, well, of course. As long as we are the first person in the door when it comes to for sale by owner situation, we are able to negotiate our fee to be paid off or to be paid by the seller mostly every time. And the majority of
Well,
you
that's how it works in the
guys,
state of Utah, basically.
yes,
So you've got
exactly.
a seller pays the real estate commissions on, if they have a listing agent, they're paying for that. And that's negotiated in with the buyer agent fee too. So
Exactly. So what's super great about buying a home in Utah right now is that the majority of sellers, probably about 95%, already have it built in that they are going to be paying a buyer's agent. So in truth, why not have that extra representation of something that's going to be your biggest purchase? I'll tell you, the majority of people that are like, oh, I'll just go unrepresented or I won't work with an agent, 90, I believe it's 98% that of all buyers, whether they believe they're going to purchase solo and start that process without an agent versus started with, 98% of all buyers actually close with a real estate agent.
I can see that.
So the majority
Yeah.
totally want to use that guidance and that representations to represent them in this biggest purchase.
Well, let's give an example. Let's say you walk into you're going on a Saturday, you see an open house, you're like, oh, let's go and look at this house. And you walk in and you're like, oh my gosh, this house is awesome. Hey, agent,
Right.
I'm interested. And the agent's like, okay, do you have somebody who you're working with as a real estate agent right now? And you go, no, but I really want this house. And they're like, okay, well, if you sign this, I can help represent both you and the seller and help you through this transaction. So in that case, if you have this agent who is representing both the seller and
And the
the
buyer.
buyer, that's okay. You can do that. But do you think that's going to be a fair negotiation?
Right.
I would question that the listing agent who represented the seller first is going to have your best interests at heart.
Exactly.
So, and the funny thing is they would love to do that because guess what? Now they get to get both sides of the commission.
Exactly.
So, would you rather have a buyer agent who's going to get paid by the seller anyway, represent you and think about your concerns and your needs, or use somebody who's representing both sides and may not have all your best interests offered?
Right. Exactly. And so that's a huge thing is people go into either a builder, and that's a huge one that we'll hit on next, but the builder or an open house and be like, oh no, I don't have an agent. And then shortly realize that, oh wait, I have to work. I am totally in the hands of the seller's best interest now because I am working with either the builder's representative or the seller's representative. When in reality, you could have just talked to us, a team of agent or a team, gotten fit with the best agent possible and gotten the best representation for yourself. That's completely separate from the sellers. And then one other thing in this market, the average days on market for a reasonably priced home with good marketing and good photos is usually around 4 days. That's really quick. A lot of you guys are working full time. You only have Saturdays and maybe Sundays, Friday nights and evenings to go view properties. You guys are all busy, and so what's very different with the Wild team is we actually have a team of 15 people that, let's say you see this home that hits the market and you're like, I have to see this tonight. And the agent that you're specifically working with is not available. We actually have 14 other people, other than that one agent, that are able to show you that door in a timely fashion because time is truly of the essence in this market. If you're late, if you're a day late, it totally could cost you your dream home or the home that you really have been searching for these last few months. So a lot of people ask us, what is different about the Wild team? We have two, designated showing assistants that their sole responsibility, if your agent is not available, is to show you homes. And so we rely on them heavily whenever we're unavailable.
Can I tell a little story real quick?
Yeah, totally.
So, I was really looking to buy a property, and the Wild team sending me, lists of things, and going across. I'm like, oh my gosh, this is perfect. This is perfect. And I know that like time is of the essence
Right.
when you want to see your property, you want to make a decision, you want to make an offer. The quicker your first offer in is, the better you can work out. And I call Brett, and Brett's like, yeah, I'm not in the state. I am
That
gone.
happens very often.
And he's like, but that's okay. Don't you worry, because we are a team and Mikkel can show it to you. I said, great. So I call Mikkel and she's like, when do you want to go? And like within 2 hours, we're looking at this property. We made an offer that day and we got the property.
It's awesome.
So I had Brett been just an individual working with, just he was his own individual person, I would have had to wait.
Totally.
And I don't know, maybe I would have still got the property. I don't know, but I was really happy to work with the team. And so to me, that's just kind of my caveat to you guys.
Thank you.
I love working with a team, and you guys are a great team. I think that's something that's important to look at when you're picking who you want to work with, and whether that's the Wild team or somebody else. Take that into consideration, because we all have to live our lives. We have to take vacations. We have to get away with our families, and that shouldn't be a knock on anybody. But if it interferes with you getting your dream home, I would take that in consideration.
100%. And I'd say too, I know it's a completely emotional process, and it's just such a high strung, and moving is truly where you probably see people at just their wits end, and they're just so stressed, and there's so much anxiety just because they're just uprooting their whole lives, and they're trying to find a house in this market. And so it's awesome about Jeff's team as well, as he also has a team under him. And
I do, yeah.
And so we can hit that as well, but there's just
a great
group of other lender or loan officers that are helping Jeff out when he gets to take a vacation and has that opportunity with his family. And so working together continuously has just been so great, because we're very close with his team and they're very close to us. So
did you want to answer that question?
Yeah. So another question here: how does it work if you want to buy a house that is listed by the real estate group that is representing you? So that's a great question. The majority of the time, if you have, let's say, Brett, who was listed on the screen earlier, is representing the seller on a house. Now, if you have a agent that you're working on or on the Wild team, can still represent you on the purchase, and Brett can still represent the seller. So there's definitely still a divide. Yes, we may be on the same team, but we still have both the buyer's best interest and the seller's best interest in mind separately. So the real estate.
And I put Mikkel up against Brett anytime.
Jeff's very nice. Just kidding. It's true. I'm just kidding. But we basically, there's still separation there. There's still complete fiduciary duties obligated to the buyer with one agent and obligated to another seller through a different agent. So we can go to that next slide, James. Perfect. So finding the right home, this is a very exciting thing. We hit on open houses and for sell by owners already about when you go into an open house, just be sure, just like Jeff said, the agent that's going to be sitting that open house is is going to be representing the seller. And so when you have the opportunity to talk to them about how excited you are and you really want to make this house work, they're going to be very, very excited to work with you and convince you to get that property. So in that case, you always just want to bring the business card of the agent you're working with, just to be sure that they understand that you are already represented and that you will have an agent reach out to them with any questions and with an offer. For sell by owners as well, there's not as many for sell by owners as I think more sellers are leaning towards agent representation, because they'll recognize that they get more exposure and just more benefit with the amount of interest they have in their home. But if there's any time where a buyer walks into a for sale by owner property, there is going to be, just like I mentioned earlier, some circumstances where the seller is expecting you to be unrepresented because you aren't going with an agent. And so most agents and teams specifically will say, okay, if there's any for sale by owner you want to check out, we totally want you to do that, because it's another option that there may not be out there. Just let us know and we'll schedule it directly with the seller. And so we'll always be there with the buyer at a for sale by owner. And whenever we are the first contact or communicator, we're usually able just to always still represent you and always get our fees paid by the seller.
Yeah, it works out.
Yeah, it does. Which sites are best to use and how do they work? So I know probably majority of you are very familiar with Zillow, and Zillow is an awesome user interface. I mean, everybody I know just loves the way it looks, it feels, it works. just the way Zillow structured is actually completely structured towards the agent. So agents will actually pay for their information to be verified or to
A
be
lot of money.
verified, thousands and thousands of dollars to be able to capture your information. And so we have a ton of buyers that were searching on Zillow, and we had to tell them like, or they had kept getting these phone calls and phone calls from these agents, and they're like, yeah, I just typed in that I was interested in that property, and now I'm getting 3 or 4 calls a day with these agents trying to follow up. And we're like, well, how is that hurting your work life and your family life having all these calls? And it's a huge stress on people. So Zillow is completely focused on the agent side and not near as much on the buyer side. And they like to capture and sell your information to agents everywhere. And so,
You know what's another thing that they do that's really interesting,
yep,
and this got me off of Zillow actually. I was kind of irritated with it.
right,
I saw some homes on Zillow. I was like, oh, look at this one for sale. And this one, oh my gosh, this is really cool. And I was doing I'm just gonna not use an agent. I'm just gonna go figure this out myself. So I went to one of the houses, knocked on the door, and they answered the door. Spanish family, which I just don't speak Spanish.
right.
So there was a bit of an issue there communicating, but come to find out, these people had already moved in the home. The home had
Oh
been
my
sold
goodness.
like way before.
Yes,
This was, I was like, wait, what? And then what I realized was all the homes that were showing up on Zillow were out of date. A lot
right,
of these homes were sold already. And so when you type in, hey, I'm interested in this home, all the agent wants to do is capture you as a lead, capture you,
right.
try to get you to sign a contract to stay with them and that you won't go anywhere else for the next maybe 6 months or something like that. And and so now you have to use them no matter what.
Exactly.
And it's not about helping you necessarily find a home right off the bat off of Zillow.
Right.
It's get you first, then we'll look after that.
Exactly.
I don't like that strategy very well.
No.
It turned me off as a person. So
For sure. I mean, most people are like, oh my gosh, this house is for sale on Zillow. Like, it looks amazing. Why hasn't it gone yet? And they are so excited they want to set up a tour, and they'll call us and be like, hey, this home is on Zillow. We really want to see it. And we'll just have to crush their dreams and be like, oh, I'm sorry, it's under contract. I'm so sorry. We got to get you off that site, because people get such an emotional roller coaster with seeing these homes on the market that are listed as active, but in truth, they are off market, and people leave those, agents specifically leave those on Zillow
as
as
marketing,
active
as
as marketing, to be able to
yeah.
grab your information, be able to gather that, and be able just to follow up with you, and try and convert you as their buyer. That's the same with Homey and other broker sites. That's actually the exact same. And so the way we like to say is we want to get you connected with the direct source, which is wildteam.com. Wildteam.com will actually get you the most accurate data possible, because it's completely syndicated with Utah Real Estate, which is where we import listings for sale. The real estate professionals
Well, that
do.
comes right off the multiple listing service.
Right, exactly. The MLS, which is utahrealestate.com. And so Wild Team is completely syndicated with that, so that whenever a home hits the market in your search criteria, it's actually automatically sent to you instantly. And so you can, instead of always searching on Zillow
I can
every
attest
six
to that.
hours,
I see it. It's awesome.
yeah, exactly. Searching on Zillow every 6 hours to see what else is new, that takes up so much of your time. And we actually created just this instant search that whenever something hits the market, it's automatically sent to you. So awesome.
We can go to the next slide.
And then we'll take this question right here. For a new build with a set price, how does an offer work? So it depends on what builder, and it's never a set price. So it depends on your builder, and it completely depends on your builder. Most builders have a model home, and they are very awesome. We totally suggest you going into model homes, because there's a really lot of great options there. The difference is just like if you were to go into open house or for sale by owner, the builder's agent has the complete best interest of the builders in mind. And so when you go in and you're like, okay, I think I want this house at this price, how detailed are you looking at their contract of change order policy, or the inflationary costs of lumber or concrete, and how much that can affect your price?
Big deal this year.
100%. We actually had several clients that went into model homes and got locked in with a builder's agent because they forgot to call us. And some of these smaller builders actually, within a month of their home closing, canceled on them. And so if they didn't have agent representation to make sure this
Yeah,
didn't
that
happen,
was all over the news.
that happened to tons of people, because and most of those people didn't have an agent representing them, and a lot of builders were even asking for 20, 30, $40,000 more just to cover their costs. And if you don't have an agent representing you to fix those price or to fix and watch out for those price adjustments, then you're really at the will of the builder.
Yeah. It was really sad
It was
situation.
really, really rough. We kind of talked about this already, 5 key strategies. It's actually 7. We've changed that since now, but we will get into this more in depth when we have a chance to talk to you one-on-one. But I'm going to tell you, if you do not use the majority of these strategies, it's going to be very, very difficult for you to have a shot in this market. And so we are all about education. We want you to be extremely confident in this home buying process. And because of that, we're going to educate you as much as we can, and then do whatever you're most confident with when it comes to placing an offer. Earnest money. Do you want to hit on that, Jeff, a little bit?
Well, earnest money is simply the money that I'm going to say the phraseology wrong, but it's money that you're putting in.
It's like an initial deposit to tell the sellers you're
Thank you.
interested,
Okay.
basically, and it goes towards your down payment.
Yeah, the important part is, well, there was a story that Brett would like to tell about the first house he ever bought.
Right.
He went in and he wasn't a real estate agent. He had just got done with school, and he thought, I'm pretty smart. I can go in and buy this house. And he walked in this home and talking to this lady and says, "Hey, I'm interested in your home. I see the for sale by owner sign outside." She's like,
Totally.
"Yeah, great." And so he wrote up a contract with her, and there was like $1,000 in earnest money, and he wrote her a check right then and handed her the check.
Oh man,
Oh my gosh,
that's not
no,
the
no,
that's
no,
not the
no,
right way.
no, no,
Yeah,
no. The earnest money is the money you give in consideration for this offer, and it basically is tying both parties into the loan. That money goes into a third party um, trust
trust account
trust
or
account,
title.
and that's either a title company or a big brokerage, real estate brokerage like Keller Williams, and they hold that money in earnest, that both parties will complete their side of the contract. And we'll talk about deadlines and contracts in a minute, but that money doesn't just disappear or not go anywhere. When you get to the end and you're closing on your loan, that money comes off of the down payment / closing costs that you would need to pay at the end. So if there was $5,000 you owed at the end and you had $1,000, now you only have to come in with $4,000 at the end. It's just simple numbers.
Totally. Inclusions. So this is another big thing that Brett usually talks about with his first home buying experience before he was in real estate. But with this first home he bought, he initially agreed in his contract that he wanted the fridge, he wanted the microwave, he wanted the range and the stove, and then some other fixtures and appliances like a washer dryer. And when he came to close and moved into the property, it was all gone. It was all gone. And unfortunately, he didn't have an agent representing him, so he didn't really know what kind of action to take. And the seller just got up and left, and he couldn't get any more communication with her. And so when you write an offer, you actually list out, okay, I want the refrigerator, I want the washer dryer, I want the microwave. And then the biggest thing here is that most of the anything built into the property should stay with the home. So that includes a range that's usually built in, a microwave, anything actually built in.
I like to say, if you turn the home upside down and shake it, if it stays,
it needs
then
to stay.
That's considered inclusions in the home. Like you can't, as a seller, take your light fixture.
Right.
Or something like that. That has to be included as much. And you may just love that light fixture as a seller, but you can't take that with you.
Exactly. And so that's very specific and particular, something that we need to disclose when placing an offer. And the last thing that I think is very important is deadlines. And so I know we're going over a ton of information. I would just say that if you have any specific questions, we'll dial all into this more when we meet more individually. But deadlines, when buying a home, there's 4 main deadlines. Within about 4 days of going under contract with a seller, you have a seller disclosure deadline where the sellers actually provide a 7-page report of everything that They know about the property with the roof, electrical, plumbing, any water damage they've had, any moisture issues. They go over everything in that that's signed off by the seller and filled out from the seller. And then about a week and a half to 2 weeks after the time of contract is a due diligence deadline. This is where you hire, if you're doing this correctly, an inspector and any other contractors you want to go through the property and say, okay, this is what's wrong. This is the estimated fix to fix these things. But you're usually given about a week to 2 weeks to be able to do this due diligence with any contractors you'd like. And during this 2 week period, you can actually go and see how you like the neighborhood, see how you like the schools, check out the HOA if there is one. Basically, do all the nitty gritty of I want this house, and I'm going to do everything I can
This
to
is
get
kind
it.
of the equivalent of test driving the car. You
Right.
take it to your mechanic. Mechanic checks out everything and makes sure that there's no hidden problems that they can
Right.
foresee. And that's what this inspector's doing. And then, driving around the neighborhood, same thing.
Mhm.
You're going around and checking things out and making sure that you really like it.
Exactly. So that's a due diligence is one of the most important deadlines, just to be sure that, you're not walking into a property that's going to have thousands and thousands of dollars of repairs already.
And what's really important about this is, let's say there's just stuff in there that no way, I don't like this. You can walk away for any reason during the due diligence deadline and get your earnest money check back.
Totally. And so that's a totally a completely that's a very often used thing is getting your earnest money returned or refunded because you walk away. There is some strategies that involve maybe not having that be an option in this market,
Right.
but it's just completely up to your confidence level with that property. And then from about 3 to 3.5 weeks from the time of contract is your financing and appraisal deadline, where you need to have everything done with Jeff. You need to have your appraisal back. You need to have all of your documentation underwritten and conditionally approved through UCCU to know that you are going to close in 4 weeks, which is the standard closing deadline.
We have with UCCU, we want to have you completely clear to close with our underwriting within 3 weeks on a purchase. So we're trying to
That's awesome.
have you
That's
just
really
ready
quick.
to close completely within that time frame. And we try to work with you really closely to make sure that we're gathering everything that we
Exactly.
need to make that happen.
Totally. So yeah, most important thing is really just being on top of your deadlines and understanding what they mean. And the real estate professional and the Wild team will definitely have your back on all of those. And there's a lot of especially in this buy confidently book, it goes through all these deadlines and all of these strategies and details that we're gonna call and make sure you get a copy of this so that you're prepared and ready for when the time comes.
We can go to the next slide there.
Yeah, thanks, James.
Um,
We kind of handled this. These are the deadlines. So to sellers, selling disclosures, due diligence, financing and appraisal, and settlement. And one thing I'd like to point out is usually 4 weeks from the time you're in a contract when you close. And when you close, that doesn't mean you own the property. You usually have about a 24-hour window from the time you sign at closing and sign all your documentation in order to get the keys to the property. So just because you sign off, that doesn't mean that the house is yours yet, but give it 24 hours and then you'll be able to move in.
yeah, and we usually do, you're doing a pre-walk through before you're going to settlement too, which is
Yeah.
really important. You're checking that home out one last time, making sure stuff isn't missing or, it's still in good shape.
Totally. We've had several buyers that go through the walkthrough before closing, and they're like, oh, this was supposed to say, and these repairs were supposed to be done. What's going on? And so we had to extend settlement in order to get those done. But that's the agent's responsibility, is to make sure that your requests and what you negotiate are taken care of, and that if we need to do extensions or get the sellers to help us out more because they didn't do those items correctly, that they're done in time for you to close before you take ownership of the property.
All right, let's go to the next slide.
Awesome. So we love this part of the presentation. We're almost done here, but the moving in and maintaining home value. Biggest thing I think for you guys to recognize here is stay on top of your maintenance. We have a ton of sellers that come to us and are like, hey, we're ready to sell, and they just kind of didn't service their AC at all, and they didn't care if some roof shingles that had issues and some windows that were broken. And we come in and we're like, okay, well, if you want to get top dollar for your home, if you would have just done these few small things, we wouldn't have so many issues that we need to do right now when you need to sell. So maintaining your home value is completely just so important, and staying on top of the basic maintenance. We actually have several people that come to us whenever they're like, oh yeah, we want to put $50,000 into our basement to finish it, or we want to do a new furnace or new AC unit that's going to cost us $10,000 because we want the top efficiency. But we talk to them some more, and our job as real estate professionals is to make sure that you have the most confidence that what you're putting into your property is going to give you the best return on investment. Some people aren't motivated that way, but the majority of people, if they're only going to be in the home for a certain amount of years, want to make sure that what they put into the property is going to give them a return. And so if you're looking at the home and you're like, okay, I want to finish my basement and put in this awesome new furnace and AC unit, we always have them come and talk to us first, because if their goal is to only be in the home for 3 more years, what kind of return on investment are you going to get putting those really high-end appliances and fixtures in a new basement? Probably not a lot. And we'll dive down into that more and more as we develop a more individual relationship with you on once you move in, on if you get any repair or anything you want to change the house over $1,000, let us know first so we can consult you on your long-term vision and your long-term goals.
Yeah, absolutely. Absolutely. And, the next one down here, tax benefits and appreciation. A lot of people don't realize, but once you own a home, you can write off the property taxes. You can write off the interest that you're paying on that home on your taxes. Now, you do have to hit a certain level with your income or
Right,
whatnot to be
right.
able to take advantage of all of this. And depending, the taxes, the way taxes are done change depending on who's in office. So I would
Right,
expect to see something different than what Trump put in place, but we'll see.
right.
But anyway, there are some good strategies that way that'll help you, and you'll find that out as you start to do taxes after you get into a home. So that's pretty great. And one of the things that we talked about earlier a little bit is buying a home will be one of the biggest investments that you ever
100%.
get into. And what people don't realize is, and this is a really cool statistic at the bottom, 83% of people's retirement comes from their home equity. That's a
That's
huge amount.
insane. That's a ton.
Yeah, yeah. So it's important to really take care of your home, make sure that it's maintained in the right way. And, it's always fun to do little improvement
Oh,
for
yeah.
the DIY
Very fun.
stuff. So,
Yeah, just recognize that we see it more and more every day that people are retiring off. My home's paid off, and I have, um, some equity that I'm able to just dip into and use, and the majority, and sell my home and be able to have the lifestyle I want in the future. And so just really we want to be so conscious with you and work with you on how to really get the most out of your home at any given point, and how to make sure you keep that investment top of mind and and just as maintained and well kept, and the best return on investment you can get.
okay, let's go to the
Let's go
next
to the next
slide.
slide, James.
Do you want to talk about
Okay.
this or?
So if you're looking to invest in a property, we'll hit this super quick. This is something that it's called the quadrants of real estate investing. There are 4 main quadrants, which are
Real quick, this is
yes,
an advanced strategy.
yes,
So this is not necessarily your first time home buyer. This is
yes,
saying, okay, if you take the next step, and let's say you bought a smaller little condo as your first one, and now you're moving up to your next bigger home, and you're trying to decide, well, okay, should I start getting into getting
real estate
investment
investing.
properties, and what will that do for me? This is kind of what that's about.
Exactly. So, funny enough, it's actually we have an investment seminar going downstairs while we're doing this. So part of the Wild team's
Thanks for
actually
being here
doing
with
the
me.
investment seminar downstairs. But the 4 main items when it comes to looking at investment properties are cash flow, mortgage pay down since your tenants are paying down your mortgage, asset appreciation and inflation, and tax advantages. We can go into this more on an individual basis. We actually do a worksheet with all of these with you to help you get a really great understanding on how to get return on investments, or a total return on your investment with any investment property. But on average, we're seeing just with asset appreciation and tax advantages, people securing 20 to 40% in returns altogether
Yeah.
there.
And I know you can get to 40 to 50% when you start
100%.
talking about all these strategies and how they all encompass the actual return of what you're really
Exactly.
making. So, and can you imagine making 40, 50% on your money
Yeah,
in the stock market?
right.
That just, I mean, what is it? Historically 10,
Yeah,
maybe,
around 10%
I
maybe,
don't know.
right?
That's
That's
probably a
probably really
higher percentage.
aggressive. Yeah.
So anyway, really, really great strategies within investing in real estate. And That's something that the Wild team does, and I help back you up with
Yeah,
the lending side.
totally.
So,
And we can discuss more about this in individual and any current properties you own. We can run this seminar or this strategy for you and see what your current return on investment is.
well, thanks you guys. We appreciate you being here with us tonight, and hopefully you were able to get a lot of knowledge from you. And I know that James, who's in the back end on this side of us for us here, is going to provide a video to replay on this whole seminar tonight, so you can watch it again if it would help you. And we're going to be trying to reach out to you. James, if you could also leave both Mikkel and my email on there, that would be great.
Or Brett's, that would be great.
Or
Brett's is
right,
fine
that's
too.
fine. And there you go. I'm sorry, there it is on the page.
Great.
So yeah, and Mikkel is Brett's right-hand woman,
Thank you.
as we say. So she is fantastic, and anything you're sending to him, she's probably going to be involved with.
That's right.
So anyway, thanks again for everything tonight.
Thank you, guys.
And please reach out to us with any questions. We're happy to help and take you on this next step of home ownership.
One last thing, totally expect your phone.
Wait, I totally forgot something.
Oh, okay.
Oh, for being on the seminar tonight. For being on this seminar tonight. I mean, some of you guys have probably already left.
Oh
Dang
my
it.
gosh.
So you guys actually, as part of what we're doing with UCCU and the Wild team as a
Yes.
partnership, we're going to give you $1,000 off of closing costs when you are able to go in and buy a house.
100%.
So 500 from the Wild
Wild
team
team.
and 500 from UCCU. I don't know who US is. UCCU. And so just let us know that you were part of the webinar as you're having these communications with us, and we'll make sure you get to take advantage of that.
Yeah, and that'll be such a great opportunity for you. And our Wild Real Estate team will actually probably be calling the majority of you guys either tomorrow or the next day to get in touch with you, find a time where we could discuss your long-term real estate goals and how we can help you in this process. And also they'll remind everybody that wasn't maybe on the call now, but that they'll be able to receive that $1,000 closing cost credit when they talk to us and UCCU when they close on a home. So just a reminder, we're going to give away these 2 books. And when we call you, set a time to give these to you or mail them to you, whatever way is most efficient for you and your time. But we really appreciate your time tonight. We know it's a long time, but a lot of information. And any questions you have, please feel free to reach out to us directly as well.
Kimberly, I'm going to answer your question, or I'm not going to answer your question, but I'm going to just let you know that I read it. Money from being a surrogate, we typically have to have qualified funds and be able to source where those funds came from. I think that would be a qualified source, but I've never had that question come up before. So we would have to look into that together. So feel free to reach out to me, tomorrow or via email or call or whatnot, and we'll touch base.
Awesome. Thank you guys. Appreciate it. Thanks, James.
Thanks, James.